that correction can be a week from now, 2 weeks from now, a month from now. These conditions can stay this way for quite some time. So you've got to be real careful about just, saying, oh, well, Lance said the markets are going to correct, so I'm going to go sell everything. Don't do that. I'm just saying that you've got all the ingredients, right, for a correction, but you need some catalyst to actually correct, to get buyers out of the markets and bring sellers back in. So here's what you need to know before the bell this morning. We talked a little bit yesterday. We've got this big divergence between the markets and moving averages. Those tend to resolve themselves to the downside. Generally, get a bit of a correction, and moving averages tend to be moving up over time, so they kind of meet in the middle. But there is some risk down to about 6,000 right now on the index. Now, it doesn't sound like a lot considering where we've been, but we're around 6,200. So you got a couple hundred points of downside risk in the markets, right now. So it's at least worth paying attention to. And that would just and all that would do would just bring you back to this kind of this breakout that we did to all-time highs previously. So again, not a lot of downside risk here, but definitely some, and that would help reset some of this overbought condition we've got in the markets. Relative strength is very overbought right now. The MACD momentum indicator, that's also elevated. So again, a bit of a correction here wouldn't be surprising. Now, again, markets are trading a little bit flat this morning. We'll see how markets kind of come out of the gate and kind of see what the action is. We did see a little bit of selling pressure yesterday, but then we saw a short covering rally kind of the afternoon that kind of salvaged the market a bit. But again, the markets are just kind of trying to hold in at this point, kind of heading into earnings season. But again, it's just, again, volume's been lightening up here a bit. We're starting to see a kind of a reduction in flows into the markets in terms of money flows. So just things, again, just kind of shows a weakening of momentum, a weakening of that price action that certainly kind of gives you a warning sign that you just might want to be a little bit cautious here, about chasing stocks or chasing markets at these levels. Kind of looking, we touched on the VIX yesterday just momentarily in our conversation, but the volatility index has dropped back down to 16. We're at a very low level on the volatility index. Volatility, of course, is just a function of options trading, and all this really means right now is that nobody's hedging for any type of downside in the market. There is no, kind of risk control in portfolios. Nobody's buying puts, even though they're very, very cheap right now. You can hedge your portfolio for a very little bit of money, but nobody's even willing to do it because they're worried about missing the upside. They're not even willing to expend the capital for insurance because of really rather just kind of chase the upside markets. And that's always a little bit of a dangerous situation when that happens, because that's just that sentiment kind of getting off sides. And we're definitely seeing that in both sentiment indicators as well as positioning in markets. Technical indicators are stretched. So all that's kind of setting up that you're going to get some type of correction. Now, here's the trick to all this, though, is that correction can be a week from now, 2 weeks from now, a month from now. These conditions can stay this way for quite some time. So you've got to be real careful about just, saying, oh, well, Lance said the markets are going to correct, so I'm going to go sell everything. Don't do that. I'm just saying that you've got all the ingredients, right, for a correction, but you need some catalyst to actually to get buyers out of the markets and bring sellers back in. You need some catalyst to do that. It'll be a headline event. It'll be some economic issue, whatever it is. But something will come along that'll trigger that selling. But that could be a week or 2 or 3 or 4 from now. But again, this is why I'm just saying you want to be a little bit cautious here about chasing risk and kind of go look at your portfolio and see, kind of how much risk you've got laid out in your portfolio, how much you've got layered into, leverage bets, those type of things. They've been working great right now, and so you're making money. Don't forget to take some profits. And, the one thing, and that doesn't mean sell everything. It just means reduce that position a bit, put a little bit of cash on the books, because you're going to get an opportunity here to put that cash back to work at a better level. So again, just kind of monitor where we are right now. Again, I'm just starting to see a lot more signs of risk building into the markets. It's nothing catastrophic, but it's certainly suggestive that you're going to get some type of corrective action here soon. That's what you need to know before the bell this morning.